Hello and welcome to Trading Growth and Value. Oh, I wanted to wear that red shirt today. What I was going to do is wear the red shirt and the green shirt underneath. And then maybe if we saw some bullish candles, take the red shirt off and just wear the green shirt. I thought about it, okay? But let's just stick with that lucky green shirt. And if we have to, continue to wear it during the session, again, not all day, during the session, try to actually help the market find a bottom here. All right, a little fun. Now, just real quick, we'd like to welcome Ocean Life, BJ, Wiley, Bill, okay, Fez, Robin, and many others. We also got Connie Hill in the chat. We welcome her as well. Now, remember, just real quick as we get started, this class is on trading growth and value. Our comments here today, we'll take a look at the market on a weekly perspective and kind of maybe talk about maybe is the market maybe perhaps better set up to be investing or is it trading? I'd like to hear your thoughts on that, okay? I'll kind of show some charts and then we'll talk about that. Now, today we'll really focus on kind of the growth component, especially when you've been in a market sell-off. Some investors might target growth over other areas. Let's look at that. Now, we've talked about the other areas, but I want to kind of look at growth just real quick, see if kind of have some examples setting up. And what should the investor be watching for? Now, also remember that the information here is provided for informational purposes only, not considered an individualized recommendation. Also, Schwab does not recommend the use of technical analysis as a sole means of research. As you attend my classes, you should be aware of like macro analysis, right? Economic data, right? GDP, retail sales, consumer confidence. You need to understand that those things can affect the market, okay? Second, you should be aware of, obviously fundamental analysis, this class, but also you should be aware of intermarket analysis, how different asset classes might affect other areas, like commodities affecting stocks, interest rates affecting commodities, affecting maybe currencies and so on. Be aware of that different type of analysis. And when you start to kind of get your feet wet in those areas, it's kind of exciting to see the whole picture, not just a sliver of what's going on with technical analysis. Now, also remember that investing involves risk, including loss of principal. Now, today, again, we're going to really be focusing on growth. I want to start with just kind of looking at the the Dow Jones first. Then we'll look at some of the other areas like sectors and so on. And I kind of want to talk about just also when we do this, look at the indexes, just kind of talk about mentality and psychology and what kind of happens in these market bottoms. Now, this is not my first pullback in the market. I can assure you that, okay? I've seen way worse, and so have you, okay? But I want to kind of talk about some things with common denominators of what we see. Barb mentioned today that, hey, as the market's kind of going up and down, you need some Tums. It just kind of depends what you're expecting for. Sometimes this is what investors have been waiting for, okay? Now, just real quick as we get going, I'm going to show you, if you have not subscribed to the Trader Talks channel, okay, I just sent you the link. That link will take you to this page. If you have not subscribed, hit that subscribe if you have not done so already, okay? And that way, just bookmark it, okay? Right to your actual, whatever you're using, Safari, Google Chrome, whatever you use for surfing the internet. Now, second thing is we also have a link for the previous classes. And what you're now going to notice is Rodeo Pro. That's funny. Now, also, this link is going to show the previous classes that we discussed, okay? So you can go back and look at previous classes there, and you're going to see that those are listed by really chronological order, okay? And also, you can follow Connie and myself also on X as well. And that way you can we post things throughout the day and the weekend, okay? Now, just real quick as we get going, I want to kind of take a look at the Dow Jones first. Now, normally this week in my teaching, I kind of want to have a theme, right? And that theme that I've been really talking about is kind of oversold indicators, okay? Now, what I'm just going to take a look at is down the bottom. This is not new. We talked about it on Monday, okay? Teach it, trading with technical indicators on Monday. We talked about it yesterday. We'll talk about it again here today. Going to have a theme this week. And we said one of the things we're probably going to be seeing this week is kind of these oversold conditions, right? And I'm talking about on the stochastics, okay? And we actually had this kind of oversold area right there. and then we had that oversold area, which we've been sitting in. Now, you're going to notice that when we kind of got to this point on the MACD, okay, at 613.9 setting, kind of had a little divergence. The problem there is price gapped up. Thanks a lot, okay? Then what you're going to see is kind of about right there. And when I say there, I'm talking about here. That is actually where you had the divergence where you could actually see it. And it's just been today, okay? Just been today. That is literally, we can finally see the divergence, which has taken forever, okay? Now, if we take a look at this, so when I say a divergence, I'm looking at the lowest, so I'm looking at the lowest period, okay? Let me just kind of label this as number one. So when we have the red bar, okay, not burgundy bar, the red bar, that's the lowest point below the zero line. Now, when you actually look at where we were just yesterday, that right there, let's label that as number two. It's not as down as far. So that's what we're talking about, where the price has actually made a low, it did, but the MACD is not down as far, okay? So as of yesterday, we started to get a divergence. Now, if you caught my post earlier on X, you'll notice that the volume, when you take a look at the post I did earlier today, the volume in the last couple pullbacks has been, the volume today and yesterday compared to other bottoms, it's been pretty similar to getting a tradable bottom, okay? So sometimes we look for price, right? We look for volume to be high to maybe show capitulation. Now, what I want to do, now some of you also might be looking at, let's say, some moving averages and so on, okay? Now, when we're at bottoms, or at least maybe areas where the investor might be thinking it could bounce, is the investor really buying Coca-Cola? Is the investor really buying Kroger? Okay, is the investor buying Walmart? Well, they might be thinking, hey, which stocks went down, maybe the most, and maybe started to bottom earliest. But the second part is also what, for example, what stocks, category of stocks, might try to bounce maybe potentially the hardest back to the upside. Well, it tends to be growth areas, okay? So when we talk about growth areas, we talk about tech, we talk about discretionaries, we talk about energy, we talk about materials. We would label probably financials more mid-beta, mid-volatility. We would include industrials there. But really, it's energy, materials, technology for sure, and discretionaries. So the investor might target some of those growth sectors. Now, if I take a look at this, I want to kind of just speak to something for just a moment, okay? So when we see bottoms, you need to understand that when we get a tradable bottom, the volatility is at its highest point. And what does that really mean? Well, when the volatility is at its highest point, the price goes down. And then it shoots back to the upside. Then goes down again. Then shoots back to the upside. So it kind of causes some, I call it, the price is jerking around, right? It's inconsistent, okay? One day it's up, one day it's down, and they're huge candles, okay? And we've seen those. That's normal, okay? Now, the biggest thing is it starts to play around with people's emotions. Okay. Now, usually you know you're at bottoms because you get, like I said, you get those phone calls where people say, hey, you think it's a bottom yet, right? And so the biggest thing is it also kind of goes back to where investors start to quit, okay? They say, oh, that's it. I can't forecast the trend anymore, and I can't see any bullish signals anyway. Now, that's true. Or you don't see as many bullish signals. And that's true because there hasn't been as many. Not that there's been none, but there's been a minority, okay? Now, the biggest actually thing is, this is like psychology, right? Now, if you were probably a professional investor, you'd be thinking, geez, I'd really like some of these other investors to just sell me their shares at a tradable bottom. Sell me those shares, the investor says, and just throw in the stinking towel. Why? So those other professional investors could try to swoop in and pick up their shares as they just mentally quit. Now, you see that in sports all the time, okay? Connie, she's a BYU Cougar fan, and we saw that with Iowa State last night where they just quit, right, Connie? So here's the deal. We see it in sports. You also see it in the market. So you have to understand when we kind of get to that point, you're at that crescendo of where you can get different type of, like we talk about, oversold reading on the stochastics. We can get a bullish MACD divergence on the MACD. You can start to get the W patterns or V patterns, and you really start to get a lot of diagonal breakouts. And what is that resistance line created from? It's created from lower highs. And if you're making lower highs, that's what's creating the line. Okay? So if you said, I'm not even watching the diagonal line, then you need to watch that diagonal line. You start getting above the diagonal line, we start to get the reversal. If there's bears that are still in here, where's their stop? It's probably right above the diagonal line. Okay? And we're going to say the diagonal line a couple times here today. So, okay, now, if we take a look at this, okay, I want to also just go back to real quick. When we take a look at, let's say, the NASDAQ, which we said, hey, if we're going to get a bottom in the market, you'd like to see the NASDAQ participate. Was it unbelievable? At 1.36%. Did it break up through a resistance here today? Can't say that. Did it start to show a divergence? Yes, it did as of yesterday. Did it come out of the oversold area, let's say, on the stochastics? We can't say that. Okay, so the NASDAQ is a little early, okay? We did not come out of that oversold territory there. SPX. When you pull up the SPX, did we come out of that area? Did we break out of resistance? No, no, no. But it's the start potentially, right? Now, sometimes you can get these bullish engulfing candles, piercing lines, hammers, right? All the above. And I just want to see, and it was actually on the future, okay? So it was on the futures where we saw long, lower shadows on the futures, which I won't bring up, but you can see it there, okay? Now, are there any questions here? Yeah, John, hey, that's not funny. Okay, I saw that comment. Do we have sports west of the Mississippi? Of course we do. Okay, show some respect, John. All right, now what I want to do is when we talk about the sectors, okay? Now here's the thing. Can we say that there's a broad-based movement in the sectors? I can't say that. And let's kind of come to a conclusion together. When you look at, let's say, the trend right here, it's still real estate, it's still healthcare. Okay, those are the only two sectors that are in trend 3, price above both moving average. The newcomer here, we actually see a little base material action getting a little trend 2. So this is early. This is almost like, is it Groundhog's Day? Is it really, is the spring coming, right? Outside of that, it's still trend 1, okay? Now, so what is that saying? It says that, hey, some stocks are probably up, but probably still the majority are still below their moving averages. Who cares? Well, because if you're a stock investor and you're waiting for the price to get above the moving averages, we can go over here on the right-hand side and see a whole plethora, as Bill would say. Okay? Bill was a spelling bee champion. Congratulate him, for crying out loud. Okay? And if we look at that, okay, on the right-hand side, you see a lot of red. And that red is actually counting, it's telling us the moving averages are red, and it counts the number of days where the moving average has been red. Script's not guaranteed for accuracy. You want to verify and have an understanding of what it's really trying to show you, okay? So still kind of see some early, but I want to kind of talk about some stocks that could be technically and fundamentally setting up, and I want to kind of talk about them from the growth perspective, okay? Now, what I want to do is let's kind of take a look at a stock. Now, I did this one on Monday, but I want to swing back to it, okay? Now, sometimes when we get tradable bottoms, something that pulls back to horizontal support, maybe. Pulls back to diagonal support, yeah. Could it be both? Yes. Okay, it could. Now, if we look at this, what you're now going to notice is a little Palantir. Now, we're going to kind of talk about some different stocks. When we talk about growth, what on earth does that even mean? Okay, and you look at this, and it's fallen right back down to this horizontal line. Now, when you look at the percent movement, it fell like 30%. Okay, now if you zoom in on this, you'll kind of see that what type of candle do we have. Now, it's never perfect, okay? But if we looked at that and said, what type of candle is that? You'd probably say maybe it's a hammer. You'd like to maybe see the body of the candle a little thinner. I think we'd all like to be a little thinner. But anyway, we're talking about candles. The biggest actually thing is when you look at this, still the same idea, right? Price selling off, but someone, people, plural, institution buying off the moving average. All right. Now, I want to kind of take a look at this. So if I said to you, this is a growth stock, how would you really know that? Well, I mean, two main things. You're going to look at the revenue, you're going to look at the earnings per share. Does it pay a dividend? That's probably three things. But those are probably dead giveaways. Fourth thing would probably be return on equity. That probably has some pretty high numbers. Those are probably going to be some main flags. We could also bring up and say, what's the percentage movement on the chart? Because when we look at Pepsi in just a second, you don't normally see Pepsi going up 100, 150% in 6 to 9 months. Okay, let's be real. Now, what I'm going to do is let's go back to the trade tab, analyze tab for just a second. We go to the analyze tab and we go to fundamentals. Now, when we pull this up, what we're going to do is just bring up Palantir. And by the way, when we talk about individual positions, it would make a lot of sense that you have an understanding of what sector it's in, what industry group it's in, and also what are the competing businesses in the space that can influence what the company you're looking at might do. Now, when you look at these numbers, I'm bringing this one up on purpose to begin with. So when we talk about, let's say, and this starts with earnings per share, okay? When you look at this, the 5-year trend has been quite strong. Year over year, it's been quite strong, okay? Now, we're talking about earnings per share, not revenue per share, okay? Now, when you take a look at this, what you're going to notice is was negative, less negative, went positive, and then went more positive, okay? Now, so why do people invest in these type of businesses? Well, they're going from negative like earnings to actually where they're making money. Now, here's the deal. When we actually take a look at this, a lot of these measurements like dividends per share, they don't pay one. That's usually a red flag for probably more of a growth stock, using all the earnings to actually put it back into the business. When you look at, let's say sales per share, sales, revenue, same thing. You're going to look at this and see that the number over time, it's not gone up like the earnings per share, but it's the highest it's been over the last 5 years. Now, when you look at the ROE, not substantial, 10, okay? But when you look at those, kind of measurements, it's kind of giving us an idea that there's been a growth story or a turnaround story, okay? Now, what I want to do is I want to bring something back up for just real quick, the SPX, and I want to show this on a 3-year weekly chart, okay? Now, I'm going to take my lines off. And so remember, in the world of investing, you got investing, you got trading. If I were to ask you a question, Josh, Luke, Bill, okay, LJ, does anyone else think that we've gone from a very strong upward trend to kind of maybe more neutral range? So let me kind of show you what I mean by this and why this class might be maybe applicable, okay? So what you're now going to notice is this was our strong upward trend. And now what it's done as of lately is kind of sat sideways. And then we've kind of created a top end of the range, maybe right there. Now, I know what you're thinking. I wish I would have been back there. Well, that's why you just kind of invest over time, okay? So if you look at this, we might say, geez, have we kind of leveled off? We kind of gained altitude, went to 33,000 feet, and then kind of going more sideways as of right now. So when we talk about trading, if we kind of said, hey, what type of maybe investing might the investor do? Could they still do investing? Yeah, sure. But are there probably going to be maybe some opportunities to do some trading where the investor is trying to buy low and sell high? That's the idea, right? So the investor, if they're kind of seeing more trading ranges, they might say, look, I'm going to try to take what the market is giving us. Sometimes you want this, but it's not really happening. The market's kind of giving you more narrow range. And so the investor, it's important to try to adjust perhaps to what the market is giving and at least maybe try to take advantage. Okay. Now, what I'm going to do is when we go back to Palantir with that comment now, I'm going to go back and look at Palantir and I'm going to pull it up and say, okay, let's talk about a trade example. Now, when you look at Palantir, one of the comments that comes up is, well, James, this could be potential resistance, this could be potential resistance, and this could become potential resistance, okay? And so people will make a comment like, well, I'll get in when it gets back above 125. And then after it gets above 125, hypothetically, then they'll say, well, dadgum, it's too high. We're going to wait for it to pull back again. Okay? So we've seen that happen a lot, right? So is there some potential opportunity from where it is now to see if it can get up to 96, see if it can get up to 107? That's the idea, okay? The investor doesn't have to wait till it gets to the all-time high to get in. They might say, look, I'm trying to play that little move back to the upside. Now, these areas, lower highs or gap down areas, these become potential targets for short-term traders. Target 1, target 2, target 3. This is a target because it gapped down to it. That's a target because it gapped down again. Those gap downs, the open prices, those could become levels of potential resistance. I've been waiting to say that. Now, what I'm going to do on this is we're going to right-click on the graph. We're going to go down to right where it says Buy Custom, and we're going to say with OCO bracket. Now, is this a stock trade or is it a derivative trade? Well, if we're just buying and selling off the chart, it is a stock trade. Now, I'm going to go to the paper money account, okay? We're going to right-click on the price graph, and now what you're going to see is we're going to go Buy Custom with OCO bracket. Now, we'll come to the Pepsi because I did have a question on that. So you saw I had that teed up, and I saw the question. Want to make sure I get to that. We'll hit to it next. Now, if you look at this, what we see is the shorter term moving average went green. Now, remember, that's the earliest indication of any change in trend. Okay, it's the earliest indication. What's the second indication? 20-period moving average goes green, which it hasn't yet, or the moving average crosses over. So we really right now, if we kind of said pecking order, like 1, 2, 3, we have 2 out of 3. The investor, it depends on how much confirmation they want, right? If they really want more confirmation, they might want to say, look, I want to see that 20-period moving average go green. It's not there yet, okay? But if the investor says, I'm okay with kind of taking that second step there, okay, and getting in and setting the stop below that level. Now, what I'm going to do is I'm going to show that. Now, what's the price right now? Now, if I unlock that, it's going to be about 89.72. Now, that's the bid ask in the post-market hours right now, okay? Now, if we looked at a target level, okay, you put those back on. If we look at the target level, 96, about 108. Now, if we look at this, if we kind of said, look, what's the higher likelihood? Well, clearly it's the lower level, okay? If we said, well, do we think it could go to 108? Less likely. We're probably going to take more time. Or sometimes investors kind of see maybe like 2 levels that are pretty close together. They might say, James, I'm going to put the level in the middle of that. Well, that'd be right around 102-ish to 103. Now, if you said, James, I want to try to get a little bit more upside, I don't want to set the first target area, we're going to set it at about 102.5, okay? Limit dated GTC. And the stop, what we're going to do is going to set that stop underneath this recent plateau. Now, what you got to remember here is it doesn't look like it's moved a whole lot, but it's actually $10 away from where we are now. Now, the higher you are off a support level, when you position size, it's not going to have you buy as many shares. So if we said, okay, $80.40, 80.40, less 2%, it's going to give us 78.79. So when you type in 78.79, stock dated GTC, now we actually really need to see, well, what's the risk we could take? Well, if we're trying to, let's say, risk no more than $500 at the most, $500 on that, double check 11, probably going to be about 45 shares of stock. Double check how much capital that would be. It's probably going to be right around, it's lower than the 6,500. And if you look at that, we're just saying, what's the risk per share? That's about $11-ish. $11-ish on 45 shares. That's going to put you right up near the $500 of risk capital. Okay. Now, sometimes when you have a wider risk, so you're kind of buying a little elevated off support, it's going to not allow you to buy the same amount of capital. So if you normally say, oh, I could normally buy 6,500 worth, it's going to be a smaller amount. Why? Well, it's because the difference between the entry price and the stop price is wider, and it's not allowing you to buy as many shares based on capital. It's really actually defaulting to a lower number of shares, which means a lower number of capital. Okay. Now I'm going to go confirm and send. And now what you're going to see is that position right there. So in green means the buy order. Red, the first row, is the sell, the target. And actually the third row right there is the stop. Now remember, in the last couple of days, we've talked about kind of setting a stop versus having a right. And boy, are there some differences. So when someone actually sets a stop, it's a trigger to sell. It doesn't guarantee it's going to sell right at that level. I gave you a homework assignment. And by the way, tomorrow, I can't wait to ask you how many of you did it, okay? So the biggest actually thing is there's pros and cons of a stop versus having a right to sell, okay? So, but it's a positive and negative, usually like most things, and that's a trigger to sell. We don't know what the execution price or what it will sell at it will be. The stop price we set is just what's called the activation price. Let's send that order. Now, that order is now sitting right there, okay? Now, what I want to do is, in this case, I want to go also back to another one, and let's bring up just Pepsi for just a moment, okay? So I can't bring up my position because it actually has the extra piece on it, but I'm going to take a look at it tomorrow. When we actually look at, let's kind of talk about intermarket analysis for just a moment, okay? So when you look at a lot of these income-based stocks, so how would you know it's income, okay? Well, when you go back and look at the dividend yield, if we look at the dividend, that's the quarterly dividend. What we're looking for is what the annual yield is. Now, that annual yield changes based upon what the dividend is, what the stock price is. But given what the 4 quarters of dividend has been divided by the last traded price, that dividend yield is 3.52, okay? Now, that dividend is probably north of 2.5, probably better, 3%, probably a really good indication that stock is more of an income-based stock. Other area that we could actually see it. Go to Analyze, Fundamentals, and if we actually pull this up and we take a quick peek, we also want to look at what was the earnings per share, okay, which was $6.56. Now wait, what was the dividends per share? $4.95. Imagine this is a pie, okay? Well, if the whole pie was $6.56, the whole earnings, the whole pizza, and the dividends per share was $4.95, what does that really mean? It means that the company is actually sharing those earnings in the form of a dividend to the investor. Take $4.95 divided by $6.56, and they're probably paying out a massive chunk, okay, of the earnings. Now, why would they do that? Well, some of these companies are well established. They don't need necessarily capital per se. They want some, but they're not going to just keep on adding to the business, because eventually they don't need to add to it. They just need to run what they got, and they're paying 75% of their earnings, okay, in the form of a dividend, okay? So that's another way we can kind of see, is this more income or not? Now, if this is on a lower percentage scale, it tips back to more growth. Now, let's go back to this just real quick. Let's talk about relationships, right? Well, whenever you're kind of having a company that pays out a lot in terms of a dividend, it's going to be sensitive to what rates do. So this is where you want to kind of look and see, well, geez, how could I see rates? Well, if you look at TNX CGI, that's going to give us the 10-year yield. Now, when the rates decline, okay, you tend to actually see those income-related stocks. They pay out a higher percentage of their income, earnings, I should say, in the form of a dividend. When this chart declines more aggressively, you tend to see the staples, healthcare, real estate, tend to do a little bit better. Today, we actually saw that rates pushed up a little bit. What happens in the rates does have some relationship to what happens with those income stocks. Don't kid ourselves, okay? And you can go back and very simply see what that correlation has been, and I'd love to do that tomorrow. okay? And we'll talk about kind of those relationships on a statistical basis. Now, when we go back to Pepsi and say, hey, look, is it showing an exit signal here? It's kind of vacillated back down, but it's still kind of above that support level. Did it blow the position out from yesterday? No, it's just kind of right in there. Now, you got to remember, when someone buys Pepsi versus Palantir, they're not buying Pepsi for the same reasons they're buying Palantir, okay? They're buying Pepsi because they actually want kind of a business that's more stable, maybe an income stream of potential dividend, and a greater likelihood that could hold potential value, okay? Now, speaking of that, let's go back to just real quick, let's go just real quick to Meta, okay? Now, sometimes when the market pulls back, like we saw with Palantir, it pulls back to horizontal support. All right, now, can it be both? Yeah, you better believe it. Now, I want to kind of show you this. If we look at this company, Meta, okay? Now, it's kind of funny the other day on Sunday, I don't know, maybe Sunday, I posted my first thing on Facebook, okay, in 15 years, okay? And all it did is make people mad. Anyway, this is why I don't post sometimes, at least on Facebook. Just have a little fun with people, and I didn't even write anything. That was kind of the fun part. Now, here's the thing. Now, when you look at Meta, what you're now going to notice is you had a horizontal resistance, right? But you can also see there might be some diagonal support as well. All right. Now, if you're a fundamentalist, feel free to also use technical analysis as well. Now, I want to kind of do this and wrap back into what we talked about last week. What did we talk about last week? Remember, we kind of brought up a couple stocks that, for example, might show some potential intrinsic value, perhaps. Well, let's run this one for just real quick, okay? Now, here it is, and we're just kind of wondering to self, hey, could this be a potential setup? Now, let's go back to something just real quick. Let's go back to analyze. Let's go back to where it says fundamentals. Let's kind of see some differences here. So first off, and this is what's kind of nice, when we look at dividends per share, $2. And you actually look at this, $14.87. Let's take that little pizza. This whole pizza is $14.87, earnings per share. And this company, Meta, they're only going to give a little slice of that Chicago. This is making myself hungry right here. I'm thinking about like a nice Chicago pizza or pie. They're only sharing $2 of the $14.87 in the form of a dividend. And they're taking the other $12.87 and stuffing it in their pockets and maybe doing something with it, okay? Reinvesting, whatever, okay? Now, so that would probably tell us this is not income, okay? This is, if it is income, very small slice, to say the least. Now, what I'm going to do is I want to come back to this, and I want to bring back up just real quick. I want to pull this back up. Let's go to schwab.com, and let's pull back up what we actually mentioned last week, and let's just run this. Now, remember what I said last week? When stocks fall, a lot of people, they kind of, they hide underneath the table, right? They're like, tell me when the sell-off is over, and they hide, right? Now, I'm going to tell you right now, being an ostrich with the head in the ground, okay? I'm not sure if that's a real great strategy. When the market falls and that VIX is straight up, that's when the investor that has experience, they're watching the market the most. Why? Because that's when things are maybe on sale. Now, emotions-wise, you have to understand that there's a lot of choppy price action, volatility, unknown, negative news, the whole kitchen sink. That is normal, okay? So I would actually tell you, you should write down some of the things that you've been thinking about in the last couple of days. And then when the market pulls back next time, see if those same things are playing out again. And what you're going to see is the same patterns over and over again, okay? Similar. Now, if we take a look at this, I want to pull up just real quick. Let's go to Learn, and we're going to go to Courses. Learn Courses. And what I need to do is I want to grab in that second course, okay, want to go back to that stock investing with fundamental analysis. Let's click on that, okay? Now, if what we're going to do is we're going to scroll down, and when I scroll down like we did last time, we're going to go to that intrinsic value calculator. Now, I want to run these numbers real quick, okay? Now, someone asked the question before, and I'm just answering now, hey, is there a way to kind of, for example, just have this automatically done for us? Look, if you're willing to pay, I'm sure, okay? Matter of fact, I'm not kind of sure, I'm sure, okay? It just kind of depends on how much you're willing to invest, okay? Whenever you kind of have something that can just do it for you, there's usually a cost with it, okay? Now, historically, have I ever felt like I needed to maybe consider that? Not necessarily, okay? I think probably when you look at a stock that you seriously might consider, time frame wise, I think it might take 60 seconds. Now, let's just kind of watch this. And what I'm going to do is I'm just going to run these numbers. Now, I just kind of have to see where these numbers are. I think we said 10.8 last time. And when I looked at the 10-year, let's go 10-year. That was 43.5. Put that right there. When we said 2 last time. When I look at stock beta, just going to double check on Meta there. And when you do this over and over again, especially when you have a couple screens, it goes by pretty fast. Fast beta, which we talked about last week, we said 1.03. What's the stock price? Okay. Stock price, 656.47. Okay. What do we got? 656.47. The stock earnings per share. Now that was on the main page. Let's show you that kind of again. Let's go back up to the top. Just type in Meta, okay? And that's going to be on the main page here. So when we scroll down about halfway, you're going to see that information just right on the right-hand side. And there she is. EPS trailing 12 months, 24.16. Thank you very much. We'll take it. 24.16. Now, these last two pieces of information just need to go to that second tab there. And we're going to pull up at the very tippy top. And actually, apologize, right down at the bottom. So we were right here. Okay, here being on historical earnings. I'm just going to go peers and ratio comparisons and say show more. Now, when I do that, it comes to where we have that tab, company comparison and index comparison. When I click on the index comparison, that's going to give us the PE of the neighborhood, 32.27. We pull that back up, 32.27, and the EPS growth rate, that is where we're just going to go back to the company comparison. Did this last week, just doing a quick example. Scrolling down, remember, we're looking at what? I'm looking at the EPS growth. We talking about the forecast or what it did? Well, let's go back for verification. EPS growth rate, okay, what are we looking for? You'll see the stock's annualized 5-year EPS growth. So are they looking at forward or are they looking at historical? Okay, well, if we go back and look at historical, it has been quite strong at 30.29. Now, obviously, we know that if we put a higher number in, it's going to taper it down. Okay, it automatically does that. Okay, because we said last time that the likelihood of it keep going up at that level becomes harder and harder and harder to do. Now, we'll take that number, type in 30.29. Notice the higher that is, it reduces it. Okay, now what you're now going to see is when we go down, it's going to give us what that intrinsic value is, and that's the stock price. So when you see that the intrinsic value, given its current fundamentals, the past fundamentals, and you're going to see that it's greater than the stock price, it's trading at a margin of safety, okay? So how often do you normally see a growth stock trading below its intrinsic value? Not a ton, let alone trading at a positive margin of safety. Margin of safety just means the stock price is lower than the intrinsic value. If we said it's 16%, it's 16%, the current stock price is 16% below what the intrinsic value is. Okay, so that's what that margin of safety means. That's what the percent means. Now, so this is what's kind of interesting. One investor is talking about, hey, be scared and nervous the whole 9 yards. And the other one says, I'm going to watch the price levels. I'm going to run the numbers. Okay. And so you got to ask yourself, am I a numbers-based person? Am I truly a technician? Or is it just about emotions and how I'm feeling? Okay. And this is the difference between people that are brand new and kind of some people that have experience. Okay. And so a lot of people say, I'm a technician. I look at the chart, and if the price fell, it's probably going to fall down to support. It has. Second, when we actually fall down, it might actually become more attractive numerically. Okay. Now, does that guarantee that the stock is going to bounce? No. Okay. It could completely blow through the support and not work. You have to understand that the capital that you're willing to risk is your economic capital. It's you're testing levels to see if they can bounce. Okay? That's what the investor is really doing. Now, what we're going to do in this example is we're going to right click on the chart, go down to where it says buy custom, and we're going to go with OCO bracket. Now, before we do that for just a sec, to be consistent, do we see any types of green lines on the moving averages yet? Yes or no? No. Okay. Now, when we actually look at this, could it be a limit order now? Well, if we did, it'd be like an aggressive entry. How else could we do this order? Now, one of the things is when the volatility is high, many investors, they like to change the order type. Like what? Like what, James? Well, when we actually have some volatility in the prices of slid, and maybe they haven't shown maybe breakouts yet, they draw the diagonal line where they're nicking the top rights of the candles, resistance. And what they might do is they might say, I'm going to set that buy stop maybe 1% above that line, maybe 2% above that line, etc. So what I'm going to do here is we're going to set a buy stop. Now I'm going to tell you what happens, okay? You can't fool me, okay? When the market goes down like this, guess what? People trade how they feel. And if they feel like, oh my gosh, I'm scared, well, what happens is they don't put orders out. And so this order is a buy stop. They'll say, I'm going to wait and see. What does that even mean? Okay, wait and see. I'm going to trade the technicals based on how I feel. I don't trade the technicals. I'm going to trade how I feel. What does that even mean? Okay. Now, if you take a look at this, what we're going to do is we're going to set a buy stop. So if we get at or above that price, we're maybe thinking that the moving averages colors might have gone from red to green. Now, your homework assignment on many of these charts, you're going to see some diagonal lines. I want you to start drawing these diagonal lines. And I want you to practice these buy stops. Draw the diagonal line, nicking the top rights of the candles. Notice where the prices have gone down to. Many of these prices have gone down to these diagonal horizontal lines. And if these start to bounce, why does the investor miss the bounce? Well, because they weren't watching, because it was based on how they feel. Second, did they have the order set up? No, because it was based on how they feel. So this is where you get to the bridge. Does the investor want to be a technician, a fundamentalist, or is it based on how they feel? It's just a valid question. Just asking you a question. You don't have to get upset, okay? And I'm not upset either. But these are the things we have to really think about. What is the strategy? Well, the strategy is to trade what we see on the charts and also what we're kind of seeing fundamentally. So what we're going to do now here is we're going to right-click on this, go to actually where it says Buy Custom with OCO Bracket, and we're going to say Stop GTC. So this is saying if we get to that price or higher, get in. Now, many of you might not like that because there's not a cap. Now, what I'm going to do is on this, for the time's sake, I'm going to put like a little $2 cap above that. So do not buy unless we get to that price or higher. But the ceiling on how much you can buy up to, or the price it can be filled at, is like $2 higher. Now, the wider that difference, the greater the chance it might fill. Wonder if it gaps up to 670 and never comes down. Doesn't fill, okay? So this is the trigger price to get in. This is the ceiling, okay? Now, what about kind of the target? Well, what we're going to do is we're going to set the target where it gapped down to. That is right about $700 or so. I'm going to put it right there. And I got to wrap this up. Dated GTC. Now, when I look at kind of where we are underneath, I'm going to set that stop underneath kind of where this recent low has been. And it's 2% below that, 624.75. Now, your homework assignment, and I know because I looked, I want you to identify 5 to 8 stocks that are down near the horizontal diagonal support levels. 5 to 8 stocks. So you're looking at them technically. Second, I want you to look at them in terms of its intrinsic value. Run the calculations. I would expect it to be a minute or so. I don't think that's going to take you longer than 15 minutes. Okay? So I want you to have 5 or 8 stocks. Tomorrow, we're going to come back and see if we can't get the stochastics to reverse. See if we can't get the MACD to actually show more of that divergence. See if we can't get actually that price to really break through that diagonal line. That's the theme that we're trying to see if it can't play out. Now, I'm out of my time. We'll change that dated GTC right there, okay? Now, I want to say thank you to Connie for answering those questions in chat, and thanks to all of you as well. There's a survey in the chat. Quick 2 questions. Click on that, and I thank you in advance for doing that. Now, also remember with what we discussed, it was done for example, illustrative purposes only. We talked about why maybe trading might be more of maybe a strategy than maybe investing, given kind of the neutral range on the SPX. We'll continue to follow that over the next days to weeks. Have a great afternoon, and we'll see you back tomorrow morning. Thanks so much. Take care. Bye-bye.